Hi, Joel.
Okay,
How are you?
I'm
Yes, it's
good.
great to hear your voice.
It's good
It's
to it's
been a
good
long
to
time, huh? How long's it been since you and I had a conversation?
I think it's been more than 2 years. I think it's been
Oh
more
my
like,
God.
yeah, it's been quite a while.
I was I didn't have gray hair then, probably. No, I did. But Joel, if you share your screen, do you know how do you see the ability to share your screen?
I'm seeing something here, but I'm on a computer that's giving me a little bit of difficulty sharing the screen right now. I'm gonna try and work through it as we're talking,
Okay.
and hopefully I'll be able to figure it out. But why don't we go ahead and just talk a little bit and
Okay.
you know.
All right, Joel. So why don't you for people, you're a market veteran, you're very well known in the small, big FX world, whatever you want to call it. How did you get started in this business? So what was your background and who do you blame for getting you involved in trading?
So, I got started in a weird way. I didn't come up with any finance or trading knowledge per se. For me, it was sitting around a table with a father that was a doctor, two brothers that were going to go on to medical school, different brains, which is one of the reasons why I wanted to come on today, because I think there's an important message that I want to share for people that are listening in, and something that I've discovered along the way, and I wanted to share that. The reason I sort of found markets was just because I had a bit of an interest. I discovered early on in speculation. It really came from at a young age from just being drawn to sports speculation, and from there I gradually made my way into finance and found my way into currencies.
Okay, so you have an important message and something you discovered. Is it a trading methodology, a scenario that you see unfolding? What is it, a method?
Well, it's not a method or a trading strategy or anything like that, and it's much simpler than that, and it's something that I just think is a lot of people don't take the time to realize. I think that a lot of traders are they struggle with an ability. They have certain tendencies of recklessness and emotional swings and disproportionality. And something I discovered a few years back was how that correlated with ADHD, and I found it to be quite fascinating. I myself have ADHD, and I found that the correlations between the symptoms associated with ADHD and traders that were trying to get on with it and get through the process were frighteningly similar. And so the sort of breakthrough.
So until you realize it, and probably a lot of people are ADHD without ever being diagnosed. So would you consider it a major trading issue, or have you found a way to turn it into an advantage? Because I'm quad polar, so. Go ahead.
No. So that's the thing. That's the beauty of it. What I've discovered, and it's been tremendous, is that without knowing it and without understanding that, it's a tremendous disadvantage, because all you do is end up thinking you're cursed or you're hard on yourself. You go through the same cycle over and over again, and you just you feel like you have a low self-esteem. But when you recognize that there are certain tendencies that you have for certain reasons, for whatever they are, and you're able to confront those, okay, it gives you a whole new insight. And the beauty of it is, the way I kind of talk about it, I think that everybody in life, you're sort of dealt your cards, and some of those cards are great and some of them aren't, and so if you can figure out, most of the time people spend focusing on their good cards, but if you can instead stop running away from the bad ones and kind of, not bad, but the challenges, and you focus on those, you just put yourself in, it's a game changer. And, the nice things about some of these qualities and tendencies with ADHD are that you do have a sort of a proclivity or a desire to take risk. There's nothing wrong with that. That's a good thing, to be able to sort of have the ability to take risks. The problem is not understanding the reckless recklessness on the other side, and sort of the emotional disproportionality. So for example, in a lot of people's everyday lives, this happens to me, and you lose your keys, Dale. I'm sure you've lost your keys in the house sometimes. And
Yeah.
most people when they lose their keys, yeah, it's frustrating, right? But when I lose my keys, like I'd be tearing the house upside down, like the world just fell apart. And that's just not, I know rationally that that's not the appropriate reaction. But at the same time, there was this feeling of just being overwhelmed and consumed by something that was so meaningless, when you broke it down. And so
part of ADHD is magnification of you're turning anthills into mountains.
Absolutely. So it's just and without recognizing that that's something that's there, and knowing how to deal with it, is just can be devastating. And so it can be obviously tremendously eye-opening if you're able to do that. Now, as an example applied to trading, there's a pattern I've seen over the years with many traders that might sort of be on this path where they kind of start out, they're doing great, and then they just a disaster, right? I believe just a snowball disaster. And I think that goes back to the disproportionality. Everything's going great, they're feeling great, they're doing well, and then sort of one thing goes wrong. And it's just that one little thing that goes wrong, it's nothing, it's fine, it's supposed to happen. And yet there's this reaction where, again, the person is consumed with this feeling of loss and failure, and it's just overwhelming, and it's not proportion to what just happened, and that ends up consuming them and eating away at them, where it just turns into increased recklessness, and eventually
they compound. So so the first step is the awareness that this is this is part of you. The second step is how do you learn to detach from the emotion and have correct thinking that it is not the end of the world, that you're just stopped out, that's normal. How did you break through that? What was the epiphany? And I'm sure we all have paradigms that it takes a lot of practice to create a new one. How did you do it?
So one of the things that I think that a lot of people struggle with that don't know about these issues, or the possibility that they might suffer from something, is that they have a sort of a lack of faith and confidence in themselves. And because there's just they just feel like they're a little bit lost. If they have success, it's because of some, random event. The epiphany, or the realization that I had, was once I understood that there was something going on here, I was able to sort of have a more sort of quantified understanding of what's been going on, and it made me all of a sudden feel a little bit more confident and sort of, okay, this is what it is. So this is what's happening. These are the things that I go down this list, and they are bang on the money. So now I can all of a sudden feel good about the fact that there's something out there that I can identify with. And that alone, that certainty of being able to identify with something is a tremendous comfort. And that comfort gives you confidence, and that confidence is what gets you sort of in the right direction. You're not going to eliminate or rid yourself of the challenges that you're sort of, I don't believe that anybody can sort of eliminate any of the challenges that they have in life. The trick, I think, is more in terms of understanding that they're there, and being able to confront them and sort of build a little bit of a fence around them, understand them, give them the right attention, right? It's just ironic that people run away from their problems, when if you give your problems attention, just like with children, you give them more attention and they respond. So it's kind of like that.
You're kind of stealing away from my interview on Friday with Louise Nonweller, an Oxford degreed hypnotist who is producing tapes for traders. Let me ask you this.
Yeah.
Have you ever felt, and I'm sure you've noticed it, you've worked with a lot of traders, is that a lot of people don't feel worthy or that they deserve success, so they sabotage good things in their life?
I've certainly felt that, and I can certainly recognize that. And again, I think it goes back to this sort of they're, you know, if we apply this idea of ADHD, they're the classic symptoms, right, are this recklessness and risk-taking and emotional swings, and these are all things that are very common to somebody that is going to, you know, if this is the cycle and the pattern that you're in, this is the type of pattern that's going to lead to those types of feelings where you just feel like what the heck is going on? You know, it's all kind of, you know, a bit of a mess.
Okay, so I'm getting a lot of reaction from the community. They feel like they're talking to you. Eric says that you're talking to, and a lot of people are saying, why would anyone feel they are not worthy of success? Kamehameha is asking that. You know, I ever hear of a guy named Bob Proctor? Joel?
I certainly have, yes.
Okay, well, you know, he's a big believer in, you know, your paradigm is developed before you're, you know, 5 years old. That before you become a thinker, you're taking in everything, your environment. So that's why, you know, you'll see families hand down emotional issues from generation to generation, and everything, just like trading, is screen time. It takes practice. And do you have any kind of written statements or anything like that that you keep on your desk to remind you?
Yeah, so I want to make an important point there, because she asks a question it's a very good question, and I want her to think about this. Okay, when you are wired differently, not sort of in the mainstream way, okay, what happens is when you're wired differently is to get to point B, from point A to point B, you're not able to go that straight A to B route, okay? What happens in your life is you get to B, but you create alternative sort of paths to get yourself to B. And because you do that, it's double-edged, right? You're able to create and sort of create a different way that wasn't there to get to where you need to go. But at the same time, you kind of are left with a feeling of, I didn't do it the right way. And so you feel like you're maybe, you're not being honest with the way that you're doing things, and you're left with this feeling of, you don't have the integrity, or you're not doing things the way. Yeah. So that's kind of why I think people feel in that type of mindset that they're just kind of destined to fail. They don't believe in themselves because they've always kind of found ways to get around it, and maybe they feel that they're cutting corners, and that's not the case. I mean, these are people that have struggled to kind of figure a way to keep up, and that they should be applauded for that. Now, I'm not trying to glorify and say everything's great. Everybody has challenges, but it's just, I think it comes down to that, and I think that's really important. And Dale, as far as like written things and sharing, I want this to be about, I want to come on and talk about this stuff. I don't want this to be about me in any way. I want to share. I have some things about the market that I want to talk about, but I'm not looking to talk about anything else, but just this, and maybe I have a couple of insights on the stock market and on the Fed. But I don't want to get into me.
Blake's saying he can't hear me. I think that,
okay.
Give me a Y if you guys could hear me. Okay. All right, good. All right, go ahead, Joel. So you want to switch gears? You want to switch gears to the market now? Okay.
Yeah, let's switch gears. But again, I really hope that people, if anybody's listening, the people that are listening, I mean, there are people listening that you really take that to heart, and I think that you'll hope to hopefully give yourself some renewed confidence that you're going to fail along the way, and there's all this other stuff. But let's get to markets, okay? I want to talk about markets because I do believe that there was a significant development. You might have talked about it over the past several days, but that Fed meeting last week was significant and in a big way, and I applaud the Fed for doing what they did. But just to break it down, because I'm sure it's been discussed ad nauseum, the critical thing that happened last week was that we've been in this trend. The Fed has been in this trend since the onset of policy accommodation, at the onset of the crisis. Of the key trend there has been to err on the side of accommodation, of policy accommodation. So every single time the Fed has kind of looked to maybe push a little bit towards reversing policy or normalization, or sort of moving in that direction towards what could be tightening or hawkishness, they continuously, right? That trend has been.
We can't do it because the Chinese market's in trouble. There was always a reason not to do it. The economy's really not recovering. There's still slack, and the jobs, the employment report, they always had a reason not to go. So now you believe that that has shifted. We're moving away from accommodation, and do you think they can overshoot with this?
Well, so I think the key is, maybe not that we're moving away from accommodation, and while that could be true, but the key here is that the Fed last week shifted from erring on the side of accommodation to erring on the side of normalization. That's the critical thing, because if you look at last week, there was every single reason for the Fed to backtrack last week. The data was slow. Data came in that day very slow. Inflation still subdued. And all of a sudden, out of nowhere, the Fed is committing to a completely different strategy, where now it's saying, well, we're still moving forward. We're still moving forward. So, we can discuss why if you like, but that is critical. And that changes, I think that changes the game. So
I'm curious, why do you think why?
Well, I think there are a number of reasons. One, I'll give you 4 good reasons. One, and some of them are talked about. One is a cushion for the next crisis. So if there is a crisis, you need to be able to lower rates, and you
that's what I believe. Okay,
that's 100% credible, I believe. The next is, I think, a very important one that academics or mainstream market hasn't addressed as much. They think it's a bit of a joke, but financial stability, I think, is critical. I think that, yes.
Try and take the air out of some of the bubbles.
Yeah, absolutely. I think that's something that's become more relevant. I think this is a big one. The one I'm going to say right now is a big one. I think that the Fed has this option to go now and continue with normalization while things are good, while they have some good things to point at. Because what happens when things get really bad and inflation finally starts to shoot up, as the Fed believes it will, as it focuses out onto 2019, then all of a sudden you're forced to raise rates when there's nothing to hold on to. And then that's really ugly. So that is another reason. And then the final reason is just credibility.
Better to do it at S&P 2450 than at 1400.
Absolutely.
Okay.
Absolutely. Yeah, and then credibility. Just the Fed needs to get some credibility, and it needs to kind of remove itself from, sort of controlling the entire global economy.
Okay, those are good reasons. What do you think the impact's going to be on the currency complex, buddy?
Okay, so this is another good one. I just want to highlight. We mentioned the S&P. I just want, for anybody that's listening in, I want to highlight some important levels that we're coming into. If Dale, can I do that, or is
yeah, you can. I'll put the S&P chart up so the crowd will be able to see it.
I'm sorry. Okay.
Go ahead.
So here are the things that you want.
Okay.
Great. Yeah. Okay. So if you pull up a longer term chart, this
is a weekly.
Yeah. So I think if you can go to a monthly, that would be great.
Okay.
Like back to sort of the pre-crisis to crisis lows in 2009, if you can. If not, don't worry about it.
There it is.
Okay, great. Okay, so here are a couple of things. First is June 2017, the month that we're in right now. So if you look at the recovery off of the 2009 low to fresh highs in 2013, it took 51 months. Okay, and if you project those 51 months since that 2013 breakout, I believe it takes us to June 2017, so right where we are now. Now, this is not like, I want to preface this by saying I'm not getting into this wishy-washy, this whole thing on, but the markets move at measured moves and paces, so it's just one thing to sort of focus in on. And these
why
are
51? Why the number 51, Joe?
No, it's not. It has. We could analyze the number 51, but the point here is that things move in measured. You see measured moves, and we had a major move then, and that major move, if we project that major move to forward, it takes us to June 2017. Okay. So the equivalent type of size. Okay.
Because I interviewed an Astro guy, and he was talking 55 times 55, which is where we are now. In fact, I think it was Monday off the crisis low, and those are Gann numbers.
Yeah. Okay. So you can get into Gann and you can get into Fibonacci, but I'm going to keep it simple. Okay. Then you come to 2464, which we just stalled shy of. That's 10% returns on the year, just about somewhere. Let's say 2465. You're looking at 10%. Why is that significant? Because at 10% returns in 2017, where we are, you got to think that there are going to be some buy-siders, some long plays that are going to look to book profits at double-digit returns in the current environment. So that's just another all these things put together, right? 2467. If you look at a 330-point measured move extension objective following the 2016 breakout. So after the market had seen a 330-point drop from the 2015 high to the 2016 low, that was a 330-point move. If you project that higher, it takes you up to about 2465. 2467 is what the level I had, but roughly in that area. And then the last one is 2485. Okay, well, there's two more. 2485, 910-point measured move extension objective post the 2013 breakout after the market had seen a 910-point drop from the 2007 high to the 2009 low. So that takes us up to 2485. And then just one more small one, we were consolidating earlier this year between 2400 and then we dropped down to 2320. That's an 80-point drop. Projected higher takes us up to 2480. The point being that, that if you take the fundamentals that I talked about, and then you take these levels in the S&P 500. It's very compelling. I'm not saying we're going to stop there, but I'm saying the case is extremely compelling for some form of a top, some form over the near term. I believe it should lead to a significant decline, but at least the case is compelling. One other area fundamentally that I think is critical.
You do believe it will lead to a significant decline, or you don't believe it will be?
I do believe. I think that I believe that we will see a 20 to 30% decline. Now, I don't know how fast.
That would take it down to 1,700 is 38% back from those low to high.
Yeah, and it's amazing how I heard years ago when all of this started that there was this strategy to push the market up as high as possible so that when it did fall off even 20 to 30%, we'd still be at levels that were beyond, highs.
Yeah. Above the 07 high. Still bottoms above. Okay.
Just two other points to share, and then we can, if you want to touch on FX quickly, but two other points to share that I think insights that I've had that are interesting. And this is not a political statement that I'm about to make, so I'm not going to be political, but it's just an analytical statement. When you look at the Obama administration and the monetary policy that was in place over the past several years, you could argue that both of those policies were accommodative. So not only was monetary policy accommodated, but Obama's approach to geopolitics and geopolitical risk, diplomacy, a certain type of policy that was a little bit more accommodative, if you will, if you want to kind of make that comparison, if you want to draw that comparison, not sort of, as willing to sort of react in more active way. Now, when you look at the current administration and where we are currently with monetary policy, they're both kind of more restrictive. So you have monetary policy, which is moving towards this normalization, and you have an administration right now that is unquestionably taking an alternative track to its approach to diplomacy. And so the point being that many people say, well, why have markets been so immune to geopolitical risk over the past several years? Why have they not, they just keep going higher? Well, I think that it lends itself to what I just said, that the policies, both on the political government side and on the monetary policy side, have been so accommodative that they've kind of been a distraction from, or sort of not allowed markets to even want to think about it. It's so what that's going on? I'm still going to go higher because the incentive is still there, right? But now, considering with the current administration and where policy is going, that immunity might fade. So it's just something that I think should be, it's food for thought.
Well, the market bottomed 3 months after Obama took office in March. So the market might be topping 5-6 months after Trump took office.
It could
Pretty
be. Listen,
close.
the case is certainly compelling for top. Now, as far as FX and the dollar go, it's interesting. Let's use the euro. Let's use euro dollar as a proxy, and we'll use that as our market that we look at. So for me, I'll give you the technicals and the fundamentals, which we kind of touched on a little bit, the fundamental side. But technically, the euro right now is trading. If you pull that up, thanks, Dale. If you pull that up, we're trading, in this area right now around 111.40. We got up towards 113. We stalled out, but you have the perfect chart up, because if you look at this chart, that goes back a little bit more medium to longer term, we're not really going anywhere. We've been in an uptrend in 2017, but we're coming up into this critical resistance area, I'd say between 114 and 117, where then it gets interesting. So my approach to this right now is, you know, we still could head higher a little bit here, and that might mean the market doesn't buy the Fed and it kind of continues to focus on U.S. protectionism and all that. But once we get up to the 114 to 117 area, it becomes highly compelling. Now, if we break down in the short term here below 111.10, that just sets up a short-term correction that would project a measured move to 109.25. That's kind of where because if you look at the 111.10 low and you take that up to the whatever high we got up to just shy of 113, and then you take that move and you extend it downwards, I think it takes us down to about 109.25, which would be an ideal level to be buying the euro, you know, for a higher low and continuation. So, but on a sort of a more sort of macro fundamental view, I kind of am not ruling out, I don't want to rule out, and this is a little bit, I guess, contrarian, but I still think the dollar has a big run ahead. So I'm not sure if it happens now. I can certainly see the euro pushing up a little bit more, but I still think the dollar has a big run, because when you couple the Fed policy outlook and this shifting strategy that seems to be focused on moving forward with the possibility of looming risk-off price action, the lure of the dollar on the safe haven bid and the yield differentials, I think, easily offset any protectionist U.S. administration policy that's already riddled with, you know, a lot of obstacles. So I still think the dollar has a nice run ahead of it, and that's not the I guess a lot of the people on my side and on the buy side, they've been very dollar bearish. Now, of course, if the facts change, then I will change, but I'm still holding on. I see no reason when you look at that euro chart to be getting aggressively bearish the dollar.
Okay, interesting. The most confusing one for me is, well, your belief is if we get this 10, 20, 30% correction some millennium in the S&P, that the dollar is going to be a beneficiary for risk off. What about the yen? Because yen's risk on, risk off. Any view on that?
Well, yeah, I mean, I have a view. I don't know that it's going to give anybody any trading ideas. You make a very good point. I would say the two currencies that are interesting in that type of environment, I think one that's going to be even more interesting that everybody's forgotten about is the Swiss franc. I think the SNB has a major, nobody's talking about it. It's kind of under the radar because it's not really moving, but it has potentially a huge headache on its hands if we see this massive risk liquidation, because the SNB cannot. They're not going to be able to fight against that capitulation if it sort of plays out that way, and so they have a huge headache. So you mentioned the yen; it's the same kind of thing with, you know, there's those diverging two-way flows in that type of an environment where you have risk off, which is kind of traditionally yen supportive, but at the same time you have yields that are dollar supportive. My view of that is that ultimately, you know, the dollar yen would move ultimately higher. So I would view, because I've never viewed the yen as a safe haven currency. I've always viewed it as one of those like kind of currencies that people say is a safe haven because it has the ability to benefit in flight to safety environments. But the reality is the yen is just a funding currency that, because it's a funding currency, traditionally benefits from risk off flow. But it's not I wouldn't say the Japanese economy in Japan is a safe haven economy. I think that's another sort of misconception.
Yeah, great point. That's a pro. What a great interview, Joel.
Thanks.
This interview was, you know, I don't completely recall our first conversation, but this was outstanding because, you know, trading, like real estate's location, trading psychology, and, you know, you came in like an open book and talked about, you know, your ADHD, and then you broke down some great fundamentals and technical areas in the markets to edify our community. I want to thank you, my trading warrior brother, Joel Kruger, for hanging out in face today with us and making us wiser.
Thank you, Dale. I'm glad to see you're still at it. It's been a pleasure to be on. I'm glad to see you're feeling good, and you know, we'll see you guys in the future. But yeah, thanks for having me on, and thanks for letting me get that message out there.
Okay, Joel, I know your Twitter handle. You want to give out your website address for people, because Joel is a must-follow at Joel Kruger, just like his name. What's the website address, Joel?
My site is JK on FX, but Dale, honestly, it's really not necessary. This is just about sharing, what I've learned, and I appreciate that, Dale. I really do. Thank you very much.
All right, my trading warrior brother, Joe Kruger. Thank you very much for sharing a look into our minds and a look into the future with what could happen, and underscoring what the Fed is doing and giving us some ideas on a few different asset classes. Good hunting, my buddy. Talk to you again soon, all right?
Yeah, take care, Dale. Thanks.
All right, buddy. There you go, guys. What a great interview. So good luck the rest of the day, and we'll be back with you tomorrow. I have a couple of guests for the remainder of the week. I want to thank Steve Volge. Thank you, Kevin. I want to thank Greg Horvat for dropping by today. Of course, as always, thank Blake for his looks and his views, and really think that we have the best webinar on the net to really get the full picture of what this team is doing and all the hard work they're doing. I recommend, besides going to a psychiatrist or psychologist to find out how crazy you are, one thing that wouldn't be crazy is spending $1 for a trial subscription at ForexAnalytix. All right? So take it easy, everyone. See you, Diego. Adios. And most of all, remember, don't just count your pips, count your blessings. Adios.